This video is brought to you by Blue Guardian. Folks, welcome to this Forex pre-market analysis for the coming week. We've got Nathan from Aerial FX breaking down 16 markets for you for the coming week. And it's not just a breakdown, he also gives you education along the way. Now, before we jump in there, we're going to hear from my sponsor, Blue Guardian. Remember, there's a 10% off coupon code in the description. Let's go. Our sponsor, Blue Guardian, is the only prop firm that gives their traders a built-in tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know their evaluations are 40 and 80 days long, giving you plenty of time to hit their low 8 and 4% targets? Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
What's going on, fellow traders? I hope you guys are doing really well this weekend. In lieu of the live sessions, I'm going to be putting together weekly pre-market analysis videos for you all. I think this will really help you kind of see more of the directional bias in terms of what I'm looking for to start the new week. So of course, all of the ones highlighted in red, for those of you who have been joining the live sessions as of late, you would know that I'm going over everything highlighted in red. Everything that is not highlighted, I will not be discussing. I just don't see anything worth talking about on those specific pairs. But I do have a lot of setups for you guys today. So as always, if you have any questions, please feel free to reach out to my Telegram, Discord, or email, and I'll be happy to help with anything that you need. And of course, if you like the way that we break down charts, if you like the way that we analyze the markets and you would like to learn more, feel free to head over to my website, aerialfxtrading.com, and just book a free call with me. I'd love to just chat with you about what it is you're actually looking for within trading. Everyone has different objectives and goals, and we'd be love to fancy the idea of potentially working together if it is the right fit for the both of us. And of course, if it's not the right fit, well, then at least before you hop on board. So I'd love to chat with you if you are potentially interested in learning more about our strategy. So let's get right into it. We're going to start off by talking about the US dollar. Now, actually, before I get into it, one more thing. It is definitely imperative that you mark off all these levels. It's very nice to kind of go back and see throughout the week, these levels that we've been talking about on these pre-market analysis videos. So that you guys can keep up with everything that we're looking at. Of course, things could change throughout the week, and that is why we have our mentorship program to kind of keep you up to date day by day as to what we're looking for, sending you all these trade ideas and setups so you guys can be taking advantage of them each and every day. But this is what I'm going to be seeing, or what I would like to see to start the week and throughout the remainder of this upcoming week. And so, of course, definitely write this stuff down, mark it off on your charts, whatever you have to do. Definitely keep up with it, because a lot of the stuff that I go over does play out, throughout the live sessions, historically, and then, through these market analysis videos. Definitely not something you want to miss. So first and foremost, let's start talking about the US dollar here. So this is exactly what I mentioned last Saturday. So last Saturday's live session, we talked about the fact that the US dollar came up into a very interesting level of supply. So we had a reaction from this level of supply. This was really our last buying volume before we started this downtrend here. Now, of course, we are higher time frame bullish. We can just kind of zoom out and see that. However, I truly believe that we probably are going to continue to fall to the downside, sweeping sell side liquidity, coming back down into this unmitigated level of demand. Now, the reason why I favor downside, besides all of this, is because we're coming into very interesting levels of demand on all these XXX-USD pairs, higher time frame levels. And we're starting to see these reactions, so I would like to see further continuations short on the dollar or further continuations long on any XXX-USD pair. And this kind of falls in alignment with that bias that I'm going to be talking about across the board here. So of course, we came into that level of supply. I didn't buy it, or sell it there, just because of course we are still in an uptrend. So obviously we had to sit on our hands there, but waiting for reactions, and we just wanted to see how price would react off of that level. And we can see prior to coming up into that level, what did we create? We created equal highs and sell side liquidity. So buy side and sell side. So what happened was we took sell side first, right? Enticing sellers below the previous quote unquote support, right? These breakout traders, right? And then price went right up to the upside, sweeping the stop losses of anyone who is selling below this level. We created resistance, and we ended up sweeping that resistance liquidity and also enticing buyers above the breakouts of this resistance. We actually came up into that level and mitigated, and then fell to the downside. So it created that sell to buy to sell, that type 2 manipulation we talk about within our mentorship program. It's one of the most amazing setups you could look for, especially on a day-to-day intra-level basis. If you can find these types of setups in the correct direction of trend during the right times of day, it just increases that probability of success so often. I think that over the past 6 years, this setup has probably been the one that's given me the most profit, just because it goes along with time and price, goes along with structure, goes along with manipulation, goes along with how the markets are manipulated to try to push out everyone before moving in the right direction. So, for instance, right in here, look, we had that type 2 manipulation, that sell enticing sellers, pushing back up enticing buyers, sweeping the stop loss of the sellers, and then pushing back down, sweeping the stops of the buyers. So really sweeping everyone out of the market before the real move can occur, really freeing up that liquidity for the market makers to actually move price in its overall direction. So even if we were to continue long, this is a higher high, a higher low, a higher high, a higher low. We failed to generate that higher high above this previous swing point and instead made a lower low below that low. So upon market closure last week, I think, let's see, Thursday, Friday, Sunday. So Sunday was right here. So I said that this has a highly probable chance of having a reaction from it. This is that last point of supply, that demand to supply flip. We can see that if we were going to make a higher high, this last selling volume, we would have had that reaction, which we did, but we failed to generate that higher high. So that's no longer valid demand. And this is actually turning from demand to supply, which is why we had that reaction from the level and then the continuation and follow through. So this is exactly what we were looking for across the board. And we kind of correlated that with all the other USD based pairs, and which we'll be going over today. But we are continuing to fall, making lower lows, lower highs. So if we just zoom out a little bit, we are below the 4-hour 50 EMA. We kind of are below the daily 50 EMA now. I want to see the next target, meaning the overall objective, be this level here around 12,700. I think that the next objective, because we've swept all this buy side liquidity, we've come up into that area of supply. We had our manipulations, we had our breakup structure, we had the follow through. I think now the most recent objective will probably be down at this level of demand sweeping sell side liquidity. So until that point, I favor dollar shorts, which would go in alignment with our XXX USD longs this week. All right, so let's go into AJ. So AUDJPY, we are in an overall uptrend, higher high, higher low, higher high, higher low. It's so important to do these top-down analysis so you can kind of see the overall direction of trend, and then we can zoom into lower time frames to find our entries. So a couple weeks ago, or actually I think the end of March, we had a huge sell side liquidity run sweeping these equal lows on a higher time frame. We can see that wick, that huge sell to buy, and that's where we started the uptrend again. All right, so we actually came into 86.3, which is the previous swing point on the higher time frame, freeing up a lot of this imbalance here. So if we scale into a lower time frame, we are now bullish, right? We have swept liquidity, sell to buy. We have failed to generate that lower low below that level. Of course, that's because we've reached that objective point, and then we created that other higher high. So now we wanted continuations to the upside. So just very quickly, what we've been talking about for the past couple of months and what we found beautiful setups on was the fact that we created accumulation that ended up failing to generate that lower low as just discussed. While doing so, we created liquidity, this head and shoulders formation. We faked out of the head and shoulders neckline, enticing sellers. We accumulated, we went long, and that was definitely expected. This was our last selling volume. So this was essentially, if we just extend this line over, essentially that break and retest, we had that reaction. We didn't have that follow through, of course, is because we saw that accumulation, and then we expanded it higher. So that turns into that demand that after the higher high, we'd like to make that pull back into for further continuation to the upside. Just taking it off of pure structure, higher high, higher low, higher high, and higher low. We ended up coming back down into here, accumulating again on a lower time frame, and then we ended up expanding, making that higher high. So had a beautiful trade from that level, created that higher high. So what do we naturally expect in an uptrend? A higher low, right? So where is this higher low going to come into? Well, we have two levels of demand here. We can see that this is our prior level of supply. So we extend that over. That was the reaction from it. But we also had this level here. So this was really just, a more of a repricing event. Repricing simply means, prior to the change of character, the change of structure, really it just fails to generate any sort of continuation to the downside before making that higher high. So as you can see, this is the low that generated this high. So we want to be pulling back into this range. This is the range of the current swing. So this selling volume and this selling volume creates really good areas of demand. So we had two two potential entries, I would say we only got into one of them because this wick never came into that start of that demand. So that's okay. Sometimes we only come into the first level, and that's why we have to be prepared for both sides. So we ended up expanding again. We never made that higher high, so I never bought it when price pulled back down into this last selling volume. Now, why is that the case? Because if I was going to buy it here, I would need to see a higher high, because at that point, if we created the higher high, then this would be the new range, and then we could look to pull back down into that level and then take a long from there. But because we never made a higher high, this could easily just be an overall pullback into this area of demand for then continuations to the upside. So that's why I didn't look to buy it there, but we had the reaction from the level, and then we made a higher high in comparison to this swing point here, and actually generated relatively equal highs to this buy side liquidity resting above. So now I looked at the most recent demand, and the fact that we came into that demand, stopped, failed to generate any sort of lower low. So this is really our last selling volume here before that higher high was created. I then saw that this would be a great opportunity to take longs from. I had this last point of demand and then the start of the last selling volume here in and around that 90.4 level. And prior to coming back down into these two levels, which we hit both of them to the T, we generated sell side liquidity. Now, of course, liquidity is oftentimes generated before these levels are met and mitigated, because we need to be freeing up liquidity prior to continuing with the overall direction of trend. Now, I know I go over this a lot, but since this is not a live session and some of you may have not joined into these live sessions, I'm going to do a really quick learning lesson for you all. It won't take but more than a minute. So this is how we can understand why smart money concepts is the way that it is. Because if we know, putting together confluence, just like we did for this demand level, why do we need to generate liquidity prior to coming into that level? Well, think about it. We can't just, when price comes into this level, we can't just buy, right? The institutions can't just push the buy button and then that's it, right? There needs to be someone on the other side of the market to buy from, right? So there needs to be a seller, right? So if someone is selling, then you can buy, right? You don't go to the grocery store and want a pack of toilet paper, and if there's no toilet paper to be sold, then you can't buy it. There's physically no supply for you to actually buy it. That's why the same thing with the market, right? If there's not enough liquidity at a specific level, you can't buy or sell. Have you ever heard of slippage? Slippage is the same thing. Slippage, if you're inputting so many contracts and so much lot size into the market at one time, if there's not enough liquidity at that exact price point, you're going to get slipped and moved to the next nearest price, which could be a worse price, right? That's why slippage is a thing, because there needs to be liquidity at a specific level with the amount of contracts that you're wanting to buy or sell from, right? So same thing goes here. We have to build up liquidity, really enticing these retail traders to take long positions off of the touches of each of these the levels of this trend line here. So we can see this is also creating a head and shoulders to some degree, right? Shoulder, head, shoulder, almost a skewed head and shoulders. We fell, enticing sellers below the breakout of the neckline, and then we went long, right? Sweeping their stops again. But to make my point even further, anyone who was buying on this trend line here, 1, 2, 3, 4, 5, 6 touches of this trend line, where are they placing their stop losses? Well, below this trend line. So if they're buying, what is a stop loss? A stop loss obviously is something that will take you out of the market, right? That's just a beginner's type of understanding of a stop loss. That's correct, but to go more in depth with it, the stop loss is a point in which a buyer or seller is unwilling to continue to be involved in the market because they think that if it continues below or above that specific stop loss level, they're going to lose more money, right? So to go even further with that, if they're buying in here and they're placing their stops below here, that means that if price comes down and hits their stops, they are forced to sell back their position to the market at a lower price. Think about it. Let's just say you bought it at 91. Right, 91. You bought a pair of shoes for $91. Price comes down, your stop loss is at 90.8. That means you are forced to sell back your position to the market or sell back those shoes at a lower price in which you bought it from, resulting in that net loss. So that's how we can understand it. If you're selling and price comes up and hits your stop, you're forced to buy back your position at a higher price than you sold it from, resulting in a net loss. Same thing if you were buying. If you bought it at 90.8 and then you got out of the market here, if you took profit, you're selling back your position to the market. Let's just say that's 91.8. Now you're selling at a higher price in which you bought it from initially. So that's how we can result in profit or loss when it comes down to understanding how transactions occur in the market. So if anyone who is buying on this trend line is forced to sell back their position to the market, There we go. Now the liquidity has been freed up, and now the institutions can place their buying contracts and mitigate our levels of demand because there's enough liquidity, there's enough sellers to where the market makers could then buy. Right? That's how we can determine and prove smart money concepts is real, just because of the understanding of the interaction between buyers and sellers that make up a market. So if they're forced to sell back their position, boom, now there's liquidity at that level. Now we can buy and then continue with the trend. So sorry, that took more than a minute, but that's just a general understanding of how we can look at the interaction between buyers and sellers and liquidity in the market. So continuing here, we're continuing to make higher highs and higher lows. We came into our level of demand in here. We actually bought it. We were looking for levels down in here. So this is actually still valid. I think that if we end up coming back to the downside and having an overall retracement, I think this would be more of like a higher high, higher low, higher high, higher low, expansion, overall pullback. I still think this level is valid, but of course, that may not ever happen. We may not actually get the pullback, but in case we do, I would like to still buy it from that level. But more intraday or more lower time frame, let's just look at the current structure now. Higher high, higher low, higher high, higher low. We came into demand, mitigated, came into demand, mitigated. Where is our last selling volume? So this is where we need to understand structure from a higher and lower time frame standpoint. So if this is the higher high and this is the higher low and this is the higher high, what do we naturally expect? Correct, a higher low. So where is that higher low most likely to come into? Well, we have to look at the counter trend. This is the counter trend. Just look at the pullback. Lower low, lower high, lower low, lower high. We had a reaction off the most recent supply in this counter trend downtrend. We failed to generate the lower low below that low. We stopped and made a higher high. So this will turn from supply to demand. So that's exactly what we're looking to take price. We're not looking to sell. We were looking for a price to pull back, and then we can long it from this level around that 91.35, which what would also be done, we would also sweep a lot of sell side liquidity, potentially even form some liquidity prior to coming back down into it, free it up, and then continue just like we had in here. So that's exactly what we're looking for, and it's just the same setup over and over again.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
AUDUSD, same sort of deal. And remember, we talked about the dollar, right? We were looking for shorts on the dollar because we came into that level of supply that we just talked about. But now let's look at AUDUSD here. We actually generated tons and tons of liquidity back from November of 2022. So about 6 months ago. This low here, this low here, this low here. And then we finally broke it. We had this trend line. We actually created equal lows right in here. We sold, essentially the sell. We pulled back up, we retested the trend line. Doesn't make any sense, right? Retail doesn't make any sense. It's really just enticement for continuation short. Retail goes short, price goes long, we free up the liquidity, we come into this level of demand. On a higher time frame, back from the 2020 COVID crash, we had a huge sell-off. Sell to buy, this repricing, this failure to generate the lower low, we stopped and then we made the higher high and we continued long. This is just the pullback to mitigate that exact level. Now, where was the counter trend broken here? Low, high, and then we see low, high, low, high, low, high, low, high, failed, higher high. So this right in here would be that demand. And then that's exactly what happens. We build liquidity prior to coming down into that level when we have the reaction. We had the break of the trend line. We had the retest. Retail tries to go short. Nope, right back to the upside. It goes long. So now I truly believe that it's now the right time to be looking for higher time frame swings to the upside. So now what we're going to be looking for are one of two things. Right, from a higher time frame perspective, we could see an overall retracement into this imbalance, into where we broke the counter trend. So low, high, failed, higher high. So that turns into demand. So either one of those two levels. Or what we can do is just play off of intraday levels. So I don't really see anything as of right now, but what if something like this happens? What if we come down, create liquidity, and then maybe break higher high, right? So generate buy and sell side, so enticing buyers, coming back down, enticing sellers, maybe pushing down into that level of demand, and then going long, we form an area of demand or sponsorship, and then we can come back down and buy that from an intraday standpoint. So just something like that could occur. I'm not saying that that's what's going to happen, but of course we have our higher time frame levels to where if price just ends up just coming down into it, great, we can then look to buy it. But then if price just continues to trickle up like it's been doing, we can take advantage of the intraday, day-to-day setups that could form in regards to, everything that we've been talking about in terms of liquidity and structure and manipulation and time and price. All that stuff can definitely come into fruition. So that's what we could be looking for on AU, but nothing too pertinent at the moment. I am looking for continuations to the upside. However, a dollar is weak. CHFJPY. So with Swiss franc, Japanese yen, we can see a theme across the board with that as well. We will be looking at XXXJPY, further pushes to the upside. The yen is quite weak. So from a higher time frame standpoint, we have our higher time frame objective. Let me just go to the weekly to show you. Obviously, we are extremely bullish, right? There's no doubt about that. We are definitely bullish. If we zoom out back from 1980 or 1979, that previous high, we're so close to that high. I think that that's going to be the objective. I think the market makers and the institutions are going to look to push price and sweep that liquidity above that all-time high. I truly believe that we are probably going to make all-time highs. So until that point, we are still bullish, at least. On a lower time frame, so maybe like a daily time frame, we're continuing to make higher highs, higher lows. So where is the structure? Higher high, higher low, higher high. So from a higher time frame standpoint, where can we see overall pullbacks? Well, let's look at the counter trend. Low, high, failed, higher high. So we have two selling volumes in there on a lower time frame. So we could pull all the way back down into this level. This could easily just be a higher high, higher low, higher high situation. Right, so that's from a higher time frame perspective. Let's kind of zoom in a little bit now. From a lower time frame perspective, what do we see? Well, let's look at the trend here. High, low, high, low, high, low, high, low, high. Could we make a low and then a higher high just like that and continue with the lower time frame trend? Absolutely. So with that lower time frame trend, let's take a look at what's actually going on. Let's go to the 1 hour. Kind of zoom in here. Higher high, higher low, we build up liquidity, retail head and shoulders, fake out, retail looks to sell, price goes long. Equal lows down in here, we had that sell to buy. So that's our last demand and our sponsored move. So we actually came into the top of that level a couple weeks ago, beginning of May actually, so a month ago. And we had the reaction from the level we closed here on Friday. So I said on Saturday's live session, I said, okay, even though we came into this level and we bought it, should we be looking to put stops below this low upon market open? Or should we still keep our stops below here? Now, the reason why I kept my stops below here was because, first and foremost, we haven't broken this counter trend yet. And two, this is Friday's low. What we could do is start the new week, take Friday's low, sweep liquidity, come deeper into this demand, and then go long. That's oftentimes what happens when we have Friday's high and low. It's oftentimes swept before continuations can occur. So that's exactly what happened. We chopped around for a little bit. We came down, swept the previous week's low. We actually filled the 1 hour time frame imbalance, and then we went long. So the counter trend is here. Low, high, low, high, low, high. This is our last point of supply, our last buying volume. We failed to generate the lower low, and we generated a higher high. So that flipped from supply to demand. So what we could see is that overall retracement, which we've been wanting for quite some time, down into this level, around 151.22. That's what we're looking for. However, even if we just continue with the lower time frame here, like the lower time frame, could we just see continuations like that to make the higher high, higher low, higher high sequence? Sure, that could happen. I always say continue to trade with the trend with your proper rules and confluences for the actual setup at hand until it breaks, right? If this breaks, then fine. It's not like we're going to be looking to short it unless there's a setup, right? But what we'd be waiting to do is wait for pullbacks into our next level of demand because we know we're overall bullish. If it keeps breaking to the downside, we just keep buying with each subsequent time frame. And I don't mean like subsequent time frame like 1 hour, 2 hour, 3 hour, 4. I just mean like this is the lower time frame area. This is a relatively lower time frame level just for more continuations, and then this is our higher time frame levels for higher time frame continuation since we're overall bullish. So if it breaks, doesn't mean it's a full-on break of structure, but it just means we could be looking to target a higher time frame level of demand for further continuation. So let's zoom into this level here, 15-minute. We can see on a lower time frame we're making higher highs and higher lows. We called this level out last week, well, this past week. We can see that we came into the 50% of this sell to buy. We did. 50% is about right there. We swept sell side liquidity, had that sell to buy, and created that huge imbalance right there. Imbalance, broke the counter trend, pulled back into that imbalance level, bought it, shot up to the moon. Okay, great. Now we're making higher highs and higher lows again. So let's just get rid of all this. So after that occurred, we created another imbalance. Huge impulsive move, chop, 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 starting to pull back. I like 154, psychological level, about 50% of that imbalance there. So that could be a level in which we look to buy from to start the week. That's definitely a possibility. If we do get a break of structure below this level, then we could be looking to wait for pullbacks into our most recent level of demand that we just talked about for further continuations long. So let's mark off these levels, guys. Let's not forget these, because across the board, even if you were to place every single one of these setups, like if you were to take them as a signal, which I just don't recommend because that doesn't help you, I feel like it would be overall profitable. Historically and statistically, it has been in the past. EURNZD. So EURNZD is interesting. We have relatively equal highs. We are in a higher time frame bullish uptrend. However, we have equal lows. So could we keep these equal highs intact and then follow the lower time frame structure down as we are doing now to target the equal lows? So essentially having this overall retracement before continuations, possibly. So, definitely not the most highly probable setup, but definitely something to consider. We created those equal highs, and then the counter trend was broken. High, low. We failed to generate the higher high. We made that lower low. Most important thing, created liquidity, had a fake out to the upside, mitigated that supply level. This supply was also mitigated too right here. And then we, again, failed to generate the higher high and instead made a lower low. So this counter trend is starting to form. So maybe it wouldn't be a bad idea to take some risk in and around this level here of our last buying volume. This last buying volume that failed to generate the higher high above that high, and then maybe this area of lower time frame supply. So we have this level, psychological level, 1.763, that round number, and then 1.7650 in and around the zone. So could we look to pull back, maybe retest the 1 hour 50 EMA, potentially, and then go short, filling up this huge imbalance that we have. So that could be the target there. Fill up some imbalance, maybe even sweep the equal lows that formed before potentially going long. So we have sell side targets, we have imbalance, we have sell side liquidity. Even though we are bullish, we have sell side targets. We know that across the board, NZD is quite strong. NZDUSD is strong. NZD Swiss franc is strong. NZDJPY is strong. So strength on the New Zealand dollar will likely push EURNZD to the downside. Even though the overall objective is bullish here, it doesn't mean that we're just always going to be bullish every day, every week, every month, every year. Right? There will be counter trend plays to play off of. So maybe worth taking some risks. Now, what we could see, what if price goes like this, and then goes like this and goes like that? Well, then the counter trend would be broken here. It could come into imbalance, maybe the 50% of it, who knows? Fail to generate the lower low, higher high, then that would turn into demand. Counter trend would be broken. We could look to pull back into that demand and go long. So something like that could form. We just have to be prepared for it. All right. So I don't think that this is a bad level. I think that could be something we look at further. EURJPY. So again, with the yen, looking for further continuations higher on XXXJPY. Higher time frame objective is going to be 153.5. This is just a higher time frame level of supply, and we can see that it's so important to have these objective points because we need to know where the market's going or where it's likely to go. Of course, we don't know exactly where it's going, but that's why we have to just put together probabilities because no one knows for sure. So again, with the yen, just like AJ and all those other pairs, we have our higher time frame levels and we have our lower time frame levels as well. Let's take a look at the higher time frame. Just like this, many people would think, oh, well, we're bearish. No, it's just an overall retracement. Higher high, overall pullback, higher low. 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 Higher high. This is now the new range. Okay, so this is the range. I would like to see some sort of pullback, whether it be lower time frame, semi-lower time frame, and higher time frame. Either one of those would be nice for continuations into that objective. Because think about it, guys. If we know the markets are not 100%, of course, no one is 100%, we have to put together probabilities to find out what the best probability is that we would win a trade. right? So if we have a higher time frame objective that we haven't come into yet, if we're overall bullish, what would be more highly probable? Looking to buy or looking to sell? Looking to buy, right? So it doesn't matter if we lose this trade here, right? Fine, we lose it. Fine, we lose this one. Fine, we lose this one. We win this one because the probability of us continuing with the structure is way more highly probable than us going short. Then we know that we'll probably win at least one of them. That's why we have to use good risk management just in case we don't. But even if you were to take 1% and lose, 1% and lose, 1% and lose, and win this one, so we lost 3%, and then the final one would be a winner, that would be 1 to 9.5. 9.5 minus 3, 6.5%. Right, so it's still net positive. You just have to, you can't be afraid to take a risk with the current direction of trend as long as you meet your rules. So where did the counter trend break? Well, let's just see. Overall pullback, we failed to generate the lower low here. We stopped, made the higher high. That's where we continued with the overall trend. So counter trend, low, high, low, high, low, high. Failed to make the lower low and then the higher high. So that was our last selling volume that came into this level of supply. And then we made a higher high. We failed to push down into it, and then we created lower time frame levels of supply of demand here. So these two levels of demand are definitely still valid as well as this level here. So the reason why I have two risk to rewards here is because, think about it. If we have, even though this would be a good risk to reward here, it's a 1 to 3.5, which isn't the best, but it still meets my rules. How can we increase that risk to reward, right? Well, for one, what if price just comes back down, reacts off the demand, and goes long? Well, we could just place one entry here and one stop loss below that low. The most appropriate stop loss is going to be below the overall low, definitely. But that's why we can split it up, half and half risk, right? Just in case something like this happens, then we're on half risk here, so 3.5 plus 9.5 is what, 13 if I'm not mistaken? So 13 divided by 2, because half risk each, is 6.5. So instead of having a 3.5 risk to reward, now we have a total combined 6.5. Right now, obviously, if price comes back down and sweeps that stop loss and goes long like that, well, now we're only in half risk here. So 3.5 divided by 2 is 1.75. We have to minus a half that we lost on this one, so it's 1.25%, which is still in the positive, right? It still makes sense because of the probability of the fact that we're bullish, we haven't come up into objective yet, and the probability of us going long versus short is definitely higher. So we have those three levels here, and then the most recent lower time frame level, meaning like just the current structure, so high, low, high, low, high, looking for a low for a continuation into our level. We have this here. So let's go to the 1 hour. Created it in head and shoulders, shoulder, head, shoulder. That's skewed head and shoulders. We enticed sellers below the breakout of the neckline. We had a retest. We failed to generate the lower low below that low, and that's where we expanded to the upside. So retail was swept out of the market. We enticed them below the neckline break, that sell to buy, and then we had that demand level here, 147.47. So what are we doing again? We're generating liquidity prior to coming back down into this level. Now, do I know for a fact that it's going to come back down into this level? Absolutely not. That's why I'm not trying to tell you, oh, just sell here upon market open because Nathan said that we're going to come down into that level. I have no idea. We could easily just continue long and never pull back. But if it does pull back, then it makes sense to buy it because of everything that I just talked about before. Right? We're also creating somewhat of a head and shoulders formation, right? Sell to buy potentially. So that's what we're going to be looking for. So yeah, that's EURJPY. It follows the same sort of deal with all the other yen pairs.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.
EURUSD. Same concept when it comes to the dollar, right? From a higher time frame perspective, I know it's blurry, I'm just zoomed out, but we have a higher high, we have a higher low, we have a higher high, we have a higher low, we have a higher high, so what do we naturally expect? A higher low. So where do we look to pull back into? Look at the counter trend. It's exactly what we keep talking about, right? So low, high, low, kind of breaking structure here. I guess that was one more run and then we went long. So where were our last selling volume? Well, right in here and then right in here. So that would be that higher high, higher low sequence. So Definitely looking to continue with the overall trend. We had that initial reaction from our first level on a lower time frame. We broke the structure here. We failed to generate the lower low below that level. We kind of accumulated a little bit, and we made that higher high. So can we now look to pull back and continue with this trend? Yeah, absolutely. I wouldn't see why we couldn't. And from a 15-minute standpoint, this is our last selling volume. Well, really this is, but if we just zoom out here, we can see that, we would look to probably want to get back down into discount. All right, so this was really where we expanded. This was our last selling volume in here. So anywhere in here is where we're looking to buy from. And that was just a lower time frame level of demand. So we could definitely look to buy that to start the week, maybe London, New York session on Monday. If not, if we actually have a deeper retracement down, I'm still not going to count out buys. Now, will I buy it from this level? I probably won't place a buy limit, but I'll definitely be looking for reactions from that level because we are entering into this higher time frame level of demand in which I would like to see further continuations long because we're looking for dollar shorts. So what this could be is more of like a, trend fake out. So enticing buyers maybe coming back down, running their stops, enticing sellers below that low, and then running their stops and going long. So that type 2 manipulation that we could possibly see. And if that is the case, then yeah, buys from a pullback after that point would be definitely valid. So we're just kind of waiting to see what happens. So I wouldn't be surprised if we come lower, but at the same time, we could still be looking to take risk off of this level around 1.0720. GBP Swiss franc. So we had a great couple of trades, these two trades here from this level. And I'll go into this very, very quickly. So make sure you pay attention. I'm not going to take too much time with this. So overall, I would probably say that we are bullish one way or the other. We swept sell side liquidity right in here, this previous low, and all these lows in here. We swept huge sell to buy, sponsored move, manipulative move to the downside, sell to buy. On a lower time frame, we had a level of demand and imbalance. So I'm not going to go into that just for the sake of time. But we created equal highs too, right in here, equal highs. So those equal highs upon that mitigation of the sponsored move and that failure to generate the lower low below this level here. We never pushed down and made the lower low. We ended up accumulating and then breaking this counter trend structure to the upside. We broke it, and now it's highly probable because we swept sell side liquidity, we mitigated the level of demand, we accumulated, we broke the counter trend structure, and we have equal highs as an objective to target. So now we can continue with a lower time frame, having confidence in the fact that we're now bullish and we're looking to target these equal highs up north, right? So now let's kind of go into the lower time frame. So we broke the counter trend structure, made that higher high. Our last selling volume was right in here. We came down into that level. We bought it. I called that out. Within our Funded Traders Club Signals group as well. And the counter trend, we had a low, we had a high, we had a low, we had a high. We came into that supply. We failed to generate that lower low. We made that higher high. So now a higher high, this becomes the new range right here. So what do we look for? Pullbacks for continuations. It's just that easy. 15-minute time frame. Let's zoom in a little bit. Why do we choose these two levels here, from here and here, and why do we put stops below this level? Well, you could have put stops below the overall low. That's definitely appropriate. But I saw this as, the reaction from the supply. So this is our last buying volume before we made a lower low. Reaction here. And we formed this wedge, right? Trendline wedge. We sold, enticing sellers. We actually mitigated this sell to buy, which is also the liquidity run from this lower time frame consolidation block. Consolidation, sold to buy. We come back down. We entice sellers below the breakout of this wedge or this triangle pattern. It was really just the mitigation of that level, and then we continued. So the manipulation occurred here. I just don't think that prices would come lower than that wick then at that point. So that's why I liked stop losses below that level. So just, for security purposes, I didn't want to get too fancy with this after we made the higher high. I just placed a buy limit from just the overall last selling volume here before the big buy up, and then deeper into the imbalance, we had that last selling volume right there. Whoops, didn't mean to do that. Here we go. So what has to occur, or what did occur? We generated liquidity. What do you know? Again and again, time and time again, we generate liquidity prior to coming back down into these levels. So we come back down. We had that initial mitigation Friday the 12th of May, so about a month ago, and then it just kind of messed around a little bit, just kind of consolidated. We had one final drive to the downside. Obviously, stops were not hit because they were below that low. And then we finally made the move to the upside, resulting in that higher high. So what do we naturally expect as a result? Upon a pullback, a higher low, where could we come into? Well, there really wasn't anything very clear except really just this last selling volume, maybe this imbalance in here. So have that level around 1.1190 round figure. So if that occurs, if we do get back down into that level, that would just simply be higher high, higher low, higher high, higher low sequence. So something to look after. However, on a lower time frame, let's take a look at what's going on in here. Let's go down to like the 30, the 30 minutes, fine. So could this be the end of the pullback for us to continue long now? Definitely, it could. Do we have to get into here? No, we don't have to. Right? The market can do whatever it wants to do. We don't necessarily have to pull back that far. So what we noticed was that we created a high, a low, a high, a low. We failed to generate that higher high, and that's where we started the overall retracement. So this turns into supply. So you could have sold it from that level, lower low, lower high, lower low, lower high. And then here we failed to generate the lower low, stopped, repriced ourselves, and made a higher high. So now this could be the end of the pullback, and now we could be looking to expand again to make a higher high above our higher time frame swing point. So with that being said, now this supply will turn into demand because we never made a lower low below that level. So if this is the overall demand, we can kind of just make it more pretty with this repricing, this kind of, consolidation, and then we expanded. So we could look to pull back down into that level to continue next week. If not, if we break, then maybe deeper down into that 119 level that we just mentioned for continuations would be appropriate. So of course, we're looking for longs. Swiss franc is weak. We're looking to buy, CAD CHF. We're looking to buy GBPCHF. We're looking to buy NZDCHF. We're looking to sell the Swiss franc. So continuations to the upside are definitely expected. And we can see we haven't even taken out these equal highs yet. We can expand that over. This is buy side liquidity that we most likely will run. So pulling back into our levels would give us the excuse to buy it, not only because the structure is bullish, but because the objective hasn't been met yet. So that's why we can be looking to continue to buy. So that's GBP Swiss franc. GBP CAD. So CAD, like I said before, we're looking to buy the Canadian dollar. Canadian dollar is strong, right? NZD CAD's going short. AUD CAD could potentially go short. I'm going to go over that here in a minute, though. CAD CHF we're looking to buy. And then, obviously here we're looking to sell GBP CAD. So let's just kind of go from a higher time frame perspective. Even though we're bullish, that is the case, definitely, for sure. We came into a higher time frame level of supply. If this low, high, so just imagine it's just being one structure. Lower low, lower high, lower low, lower high, right? There are two levels of supply that I mentioned. It was right in, I think it was, you can see it better on the daily. Yeah, we had that doji candle that essentially was our high, low, demand reaction, failed, lower low. So that was that, and then we had a lower time frame level of supply here after these equal highs were run, buy to sell. So looking for a reaction from the level. I didn't take shorts, but we can see we had the reaction. Even though we are bullish, though, we still have had reactions. But let's look at the counter or the lower time frame structure. So if we go like this, we have a high, a low, a high, a low, a high. If we get an overall pullback, that's what we could see for a low for further continuations to the upside, if that's what's going to happen. So this is not the structure. I mean, it is structure, but and it could go long just with the lower time frame. But from the higher time frame perspective, this is the high that generated this low. And when we made a higher high above that level, it was right here. So this is the range. So could we see an overall retracement for continuations? Yes. Where could that come into? Well, look at the counter trend. Low, high, failed to make a lower low, higher high. So this level of demand, we could have that pullback into for continuations. And look at this, we have equal lows. So that could be something that we target short within this counter trend to then look to buy it from that demand level to go long. All right, so that's how it's so important that we look at the markets from a higher time frame standpoint, right? So that's exactly where we failed to generate the lower low within this counter trend downtrend, and that's where we expanded to form that higher high. We generated equal lows, we came back up, mitigated that supply level, and now we're starting to fall. So we made a low, we created equal highs. That all of that liquidity was run with this wick that buy to sell, and that's where we generated the lower low within this counter trend. Low, high, sweeping liquidity, lower low, lower high. We're looking for that 1 drive, 2 drive, 3 drive, that 3rd drive into the low to sweep sell side liquidity to mitigate our demand, filling up imbalance, building confluences for our trades. When our confluences are not there, what do? We do not trade. Four words: we do not trade. It is not good to be trading every single solitary day. Why? Because there is not always a setup every single solitary day. I can't stress that enough. More trades do not equal more profit. I would probably say more trades equals less profit, to be quite honest, because you're being less selective with what's going on in the market, right? Have a trading plan. Have a list of rules. If you guys have been trading for quite some time and are still seeing failure, you're probably doing something wrong. So either one, you can continue to do what you do and continue to fail, or you can, understand what you're doing wrong and start to change it. Be more patient with your setups, right? Get help, find a mentor, learn, right? And don't hop around from group to group expecting someone else to make you rich, and then thinking that this is an easy thing to where if you join a group and you instantly see failure, you automatically think that the group is bad. From 6 years of experience, I thought that exact same thing. Truth of the matter is, no one's going to make you rich except for yourself, and groups only help with, having a mentor is 100% important. However, you're not going to understand the skill set instantly. You have to continue to practice, right? It's practice, practice, practice. Doctors don't just go to school for 6 months and become a doctor. They go for school for over a decade, right? Not saying that Forex trading takes a decade to learn. I'm just saying that you can't be profitable in a month or 2 or even 6 months, heck, probably even 12 months of trading. It takes years of experience. That's why people who hop around from group to group are restarting their clock over again. They join a group, they fail, they think that group doesn't work because they want to see instantaneous success. And when they don't see that because they just don't understand the reality of how markets work, they hop around to the next group. Learn a new strategy, the clock starts all over again. Find someone who you like, find a mentor, stick with it, don't give up. I guarantee you find success if you wait it out, if you continue to practice for like at least 12 to 24 months. All right, continuing here, we had that manipulation to the upside, lower low. So now we're looking for pullbacks. Well, where? Well, what do I keep saying? Look at the counter trend. High, low, demand, reaction, failed, lower low. That's our first level from demand to supply. Had the reaction kind of close here on Friday, I would definitely expect price to run the high before continuing, or continue with this pullback up until this imbalance here and our last buying volume on a lower time frame for continuation short. I do expect further shorts, but we'll have to see to start the week. That's GBPCAD. GU, dollar is weak, so we're looking for continuations to the upside. Whoops, I did not mean to do that. What the heck just happened? Okay, never mind. So from a higher time frame perspective, okay, are we going long or short? Let's just try to keep this very, very, very simple. Okay, we don't need to confuse ourselves. Are we going long or short? Okay, we're going long, right? We have imbalance. Huge objective point. Filling that imbalance would be about 1.3. That could be an objective. If we're bullish, we need to be looking to what? Buy. Exactly. See, you guys are smart. Right, anyways, right in here. Higher high, higher low. Many people think, oh, okay, well, we broke the structure. We need to continue to trade short. Well, not necessarily. Just because we broke the previous low doesn't mean we should be looking for pullbacks to short. We're in a bullish uptrend. What are the probabilities that we go long versus short? The probability that we go long is higher than the probability of us going short. So what do we need to naturally be doing? Buying. Simple. Liquidity, 1, 2, 3 touches, right? Retail is probably involved somewhere in here. There's a ton of liquidity built up here. That's why we had that run, and then that's where we started the uptrend. Okay, so I fully expect us to make a higher high. Following the mitigation train here, sell to buy. What time did this occur? 1 a.m. Eastern, so it's not really London open, but close, just sweeping the Asian lows. So we swept all liquidity in here, sell to buy, higher high, pull back into that level. And then what time did we mitigate that level? 3, 4 in the morning, London session open for me. And then what do? We make a higher high, we pull back. So essentially just following structure, high, low, into demand. And then we start again. Let me just zoom out. Whoops. There we go. Mitigate the imbalance, had the reaction, mitigate this demand, come back up, mitigate this last selling volume, continue up. So it's just following the mitigation train all the way up, knowing that we're bullish, we need to be looking for excuses to buy. So where's our most recent level? Well, really right in here is the level in which we kind of filled imbalance, failed to generate the lower low, obviously because we're bullish. We have this last selling volume overall, and then within this range, we have that last selling volume as well here. So I'd like to see further continuations from these two levels. Ideally, stops would really need to go below this low here because this is the range of the market. Higher high, higher low. When we made the higher high above this level, it was right here. So this becomes the new range. So ideally, you'd need to put stops below that level. So what you could do is take a chance here, maybe half risk, and place stops below the most recent low, and then maybe look to buy it within this imbalance again, and then place stops below that level. Would increase your risk to reward for each of those trades. Something like that, instead of having just like one entry here with a big stop loss. Even though this could be a huge swing to the upside, it's just better to be smart, right? So looking for continuations long. Same thing with NZDUSD. NZDUSD is actually looking really, really pretty. So with NU, let's zoom out to the higher time frame. And of course, just like AU, just like EU, just like GU, all these XXX USD pairs, we're looking to push the upside. We're looking to buy. Because we came into finally that higher time frame objective level, sweeping all this liquidity, that huge sell, and now we're looking to retrace. So even if, actually, before I get into what I was about to say, let's actually continue here. 4-hour time frame, we can see that this is a supply level. We mitigated that level. We failed to generate the lower low, made the higher high. We can see the flip in changing character. So that becomes demand. So I'm not to say that I bought it from that level. I didn't buy it from that level. We could have come lower, just deeper down into here. But I saw the reaction from it. Oops. Lower time frame, 1 hour. Saw the reaction from the level. And then right in here, we failed to generate the lower low. We made a higher high. We ended up creating liquidity. Boom, 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 boom. Swept the liquidity, coming back down into this general zone. We can see a reaction here, here, here. So support, 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 resistance, filling imbalance, support again. So this is a highly sensitive region. So that was where we swept liquidity. We failed to generate the lower low below that level and then made a higher high. So what is this? High, higher low, higher high. So now we can be looking to take it off the third drive into a higher high, most probable setup. So that's how we can formulate those setups there. So why these two levels? Well, we can see that if this is supply, we had a low, we had a reaction from it, failed to generate the lower low, and instead we stopped after pushing down, and made the higher high. So higher high, higher low, either from that level or from this level here to continuations to the upside. And now going back to what I was going to say is even if we are to go short, even if we are to continue short, this is why we can take profits at these levels of supply. Lower low, lower high, lower low. If we've reacted off the level and now we are lower time frame bullish, buy it up as long as we have confluence, which we do in this situation because of the confluences I just showed you. Now we can be looking to buy it up into a lower time frame or relatively higher time frame objective. Huge imbalance in here, just straight selling volume. That was our last buying volume, just getting deeper back up into this supply level, just pushing back up into here, just in case we are to go like this, we can take our profit and get out. If you want to take the majority of your position off the table and then hold a runner, you could definitely do that because we did come down into this level of higher time frame demand. So could we make a higher high? Absolutely, especially because we have equal highs. We have this buy side objective. And then we could be looking to push deeper up into really this supply level up here, our last buying volume before we made the lower low, and filling up the imbalance around that 6,450 level or 6,5. So definitely a possibility. Trade management is just as important as finding the right setups as well. All right, a couple more and then we're done. NZD Swiss franc. So with NZD Swiss franc, even though we are bearish, we have a counter trend buy opportunity. For one, I'm not going to go into everything in here. It's just going to be a lot. really just to continue with the trend. We had supply, building up of liquidity, buy to sell. We had supply here, lower time frame. Again, you can't see this. I'm just going over it quickly. Mitigation, pull back. We had a huge liquidity run right there into a lower time frame supply, buy to sell. We had a repricing continuations. We failed to come into these two lower time frame levels of repricing, which is why we're still looking to short from these levels, but we never came back up into it. We actually created equal highs. So that's where we can be targeting. That's the objective, these supply levels and this buy side liquidity. So why are we looking to buy counter trend? Good question. Well, we did not look to buy it from this level of demand. Why? Because if we're making lower lows and lower highs, we would have easily expected to make a lower low. But the fact that we stopped and accumulated and then expanded to the upside, broke the counter trend, I looked back and saw, okay, well, this is an area of demand, the last selling volume to go long. So we had that reaction, so it made sense. I still, even if this setup were to occur again, I wouldn't buy it from this level. Why? Because you don't know. It could have easily made a lower low, right? The probability of it making a lower low is definitely higher because you're in a downtrend. Having common sense is so easy to have, but so hard to obtain sometimes. It's definitely an easy thing, but for some people it still seems to be difficult. Anyways, we saw the accumulation, and then we saw the higher high, and then we started to see the reason why we're looking to buy from this level, which I know it doesn't look like much, but I'll zoom in a second, is because we started generating liquidity. Also because we can put correlation into the mix here. We're looking to buy CHF, we're looking to buy GCHF, we're looking to buy all the XXX yen CHF pairs. So yen CHF would naturally go along too. And we're looking to buy NU, we're looking to sell EN, New Zealand dollar strong. So of course it makes sense to buy NZD Swiss franc. So we ended up generating liquidity. So I'm thinking, okay, well, if we're going to go long here based upon that correlation and relative strength, could we sweep liquidity first? So creating a channel, breaking out of that channel, enticing sellers, but mitigating a level of demand to go long. That's exactly what happened. So let's zoom into, I think it was the 15-minute. So we had the accumulation, and then this is where, right, so lower low, lower high, lower low, lower high, lower low, lower high, failed to generate the lower low, higher high. That was that last repricing, that doji candle, that last selling volume. So that's why we had that level there. That's why we built liquidity before coming into that level. We came into that level, boom, we expanded to the upside. Let's actually go to the 1 hour and let's see if we can find any price volume divergence. So VFI, and in this case, we don't have much, and we don't always have to have much. This is something that we could be looking for as an added confluence, but not necessarily has to be there, right? Volume is still falling as price is still falling. Volume is then rising and price is rising, so there's no divergence. If there was, volume would be rising as price is continuing to fall, indicating a potential reversal. I'm not going to go into why that occurs or this sort of the quote-unquote science behind it, just because it would take too much time. So that's just an added confluence, and that's why we don't necessarily absolutely need it, because it still proves itself. It still went long from the level in which we were looking for anyways. So what we're looking for are, we had the sell to buy, higher high, so we're looking for pullbacks to continue up into our 5,700 psychological level. We are above the 1 hour 50 EMA. First entry could be around 550, right? 5.5 psychological level, round figure, and then this doji candle here, that area of potential demand. So we just could get deeper down into discount before looking to buy. All right, NZDJPY. So with NJ, we are looking to buy XXX yen, just like we've been talking about. And it's very similar to CADJ, very similar to AJ. We remember on AJ, we swept the higher time frame lows. That's what we did here with that wick. We swept it. Low, high, failed, higher high. Now we're starting the uptrend. And we have an objective at 88.75, which we haven't hit yet, not even here. So that's what makes it even more probable, because we have that objective point. Let's go to the daily, zoom out, this lower time frame supply up in there. Anyways, we swept sell side, now we're starting the uptrend. So higher time frame, we're extremely bullish. Now higher time frame, we're bullish. Lower time frame as well, we're also bullish. So higher and lower time frame are in alignment with each other. So where did we fail to generate the lower low? Well, if this is a low, this is a high, this is a low, this is a high, we failed right here. Let's look at that counter trend. Okay. So we failed in here. Let's go to the 1 hour. So supply. Had the reaction off supply, failed to generate the lower low. Pushed up higher, had a little bit of a reaction from that level there, the last buying volume, and then we broke the structure. We made a higher high after that. So this would now be classified high, low, higher high. So what do we naturally look for? A higher low for a higher high. So what do we do prior to coming down into the level, or into these two levels of demand? We build liquidity. What do you know? Equal lows. Happens time and time again. What are we also looking for? Potential head and shoulders. Shoulder, head, shoulder, neckline, sell to buy. That's why we have so much confluence surrounding this level. We just have to be patient. All right, so that's NJ. AUDCAD. So with AUDCAD, it's a little, AUDCAD, I love AUDCAD. I think we are going to go long. Just from a higher time frame perspective, quickly go over this. I'm just going to go over it very quickly. I've already been over this plenty of times on our live sessions. So this is back from 2001. Trend line, 1 touch, 2 touches, 3 touches, 4 touches, 5 touches of this trend line that literally lasted 8 years. So much liquidity is resting below this level. No wonder why we sold off, right? Trend lines don't make a lick of sense, ladies and gentlemen. It's just touches on a little line. How does that determine real levels of buying or selling? It doesn't, right? It's all retail. Observe the masses, do the opposite. That's how you become successful, not only in trading, but in life, all right? So, had that touch of the trend line, sold off, enticing sellers below the level, sweeping all that liquidity, pulling back that break and retest. Oh, the break and retest failed to generate the lower low, higher high. This turns into demand. Okay, and that's where we made the higher high. Again, what do? Generate equal lows, generate liquidity prior to coming down to that level. So what happens? We have an overall pullback. So we have that higher high, overall retracement into that level. Why did we come into that level so strongly? And why was COVID used as the excuse to push price down into? This is 2020. This is March of 2020, the crash, right? It was the catalyst to drive price into the level very quickly and then move away very strongly, sweeping all the liquidity and mitigating that level. So counter trend, lower low, lower high, failed to make the lower low, higher high. That will turn into from supply to demand. And we had just a lower time frame one in there, which is why it's exactly where we came into originally over here. We came into that level, I'll scale in. We accumulated into that level. Counter trend again. Supply, a last buying volume, lower low, lower high, failed to generate the lower low below that level, expanded higher high, broke the structure. So this is the overall demand right in here, right? That last selling volume. But if we want to just like zoom in a little bit, we had a sort of a selling volume in here. We have imbalance. We have more imbalance down in there. So really just anywhere in here would be a good idea to be looking to buy. So we had 3 levels. So 1, 2, and 3. So I'll just zoom out to just keep going over here. Had the reaction from the level, the first level. So could we come lower into these 2 levels? Potentially. That's definitely a potential because we're still counter trend bearish. Low, high, could make a lower low before expanding. Definitely a possibility. However, we've come into this level here and we've had an expansionary move from that level. We're starting to make higher highs and higher lows. So with that being the case, we could potentially just be looking to continue to trade with the trend until it breaks. We have a high, pullback, low, high, pullback, low, high, pullback, low, high. We could, continue with the trend, and if it breaks, then we can be looking then for our other levels to then be looking for buys. All right. So I have this level marked off. This is a unmitigated level of supply. You could see a potential liquidity run. So sweeping liquidity all in here. Sell to buy into that level to go long. If you want to be patient and wait for something like this to occur, wait for the counter trend to be broken, pull back, long it. That would be way more highly probable. And I love that setup. Right? If we came into that level, built liquidity prior, sell to buy, higher highs form, pull back into our demand to go long, yeah, that'd be cool. But that hasn't happened yet. So we just have to sit on our hands and just be patient. All right, 2 more. AUDNZD. The exact same analysis as what I went over on AUDCAD happened on AUDNZD. Now, of course, we had the trendline liquidity, run, sell to buy, repricing, lower time frame, right? Higher high, so pull back into that repricing, of course. We have an expansion. We failed to generate the lower low. We may have a higher high. Last selling volume is in here. Going over to the lower time frame prior to coming down into that level of repricing way over to the left, we do that type 2 manipulation. We build liquidity prior to coming into the level. We have these equal highs, we have equal lows, enticing buyers above the breakout of the resistance, sweeping their stops. enticing retail traders below the support, mitigating the level, sweeping their stops, buy to sell to buy, shaking everyone out of the market before the real move occurs. So where is our last point of demand? Last point of demand is in here. There's just like a lower repricing in there on a lower time frame, but this is the last selling volume. So that's what we wait for. Sell to buy, reprice, continue. Higher high was formed, higher low. We generate more liquidity. 1 touch, 2 touch, 3 touches here, which makes no sense because we're not just going to go long from here. We have our objective point at that level of demand we just talked about. And I told people on the live session that this could really be the trade of the year. And it's turning into it, playing out just as expected. Just have to be patient. So what is this? We had the break of the trend line. We had the retest of the trend line. They go short, we go long, boom. Who wins? We do. Who loses? Of course they do as well. So potential re-entry. Well, there's really nothing of interest, really just trickle. Trickling means real trend, right? That's just what I've seen over the years. When prices trickles, this is really an indication of the real trend. So I would really like to see a pullback to some degree. We've broken the counter trend structure now. We had our high, we had our low, we had our higher high. So now we can be pulling back. This is the new range. So stops are definitely at break even. Partials have been taken above our previous high. So I would like to see an overall retracement at some point. Who knows when, even if it ever does. If it does, great. I'd be looking to buy at discounts in and around this level 1.067. The reason why is because of this supply, inside supply. So we had, because think about it, if it was an outside supply, it would be like this. Actually, let me just draw it over here. So it'd be like boom, 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 and we would have had the reaction from the supply. We would have failed to make a lower low, higher high, so that would turn into demand, right, for then continuations. Kind of looks like this. But instead, we don't have the reaction off the supply, right, that last buying volume right in here. We actually just bust right through it, creating the huge imbalance. So imbalance and inside supply, if price does get an overall retracement, that would be a really great level to continue long from. All right, higher time frame, targets 1.1240. Called this out on a YouTube video when price was in here. I said that it does not have to come into it immediately. I made this video in like February of this year, posted to the Trading Nut YouTube channel as well. I talked about the overall objective. That was the overall objective right in here. If we are to go short, which I just don't think we are, but even if we are, this is the last buying volume, so higher time frame supply. It's the same concept, just looked at from a higher time frame standpoint. That would be it, 1.1240. We need to come into this level prior to going short from a higher time frame standpoint. But we're extremely bullish higher time frame, so I definitely expect a higher high above this high. But if we don't, for some reason, I think price needs to come into this 1.1240 level, which is it's going to come into. So there was a comment on that YouTube about, oh, if it doesn't work, then your system doesn't work. Let me make this absolutely clear. If it doesn't work one time, does that mean it doesn't work at all? This is why 99% of people have piss poor mindsets when it comes to trading. Piss poor mindsets. Doesn't work immediately, doesn't work at all. Come on, guys. Let's grow up a little bit. Okay. So now I'm pretty sure 99.99% of you probably have forgotten about that if you've watched the video. So I'm going to go over it now. Just because it didn't come into it, took a couple of months. It's still the same analysis I've had for over 6 months now. I'm just being patient, waiting for it. Now it's starting to come into fruition, and I've made money from it. Now we know where it's going from a probability standpoint, so it just makes sense, right? So, always, do your due diligence, be patient, and just because something doesn't work out one time doesn't mean it's never going to work out, right? Last one, AUDCHF. So, we're looking to buy 8 Aussie dollar, New Zealand dollar. We're looking to sell the Swiss franc. So it doesn't really make sense for us to be selling Aussie Swiss. However, we're still in a major downtrend. This is our most recent supply zone. We had that, just like NZDCHF, we had that unmitigated levels of supply, right? We had liquidity run buy to sell. This was the end of this pullback before the expansion here. So we had 2 lower time frame reprices. I know you can't see it because we're on the 4 hour, but if you go to the 1 hour, you'd be able to see it more easily. And then we just generate liquidity. We had a great trade from this level here. Didn't hit stop below the level. So congrats to you, those who got in. So now it's really just the higher high, higher low, higher high, higher low, this counter trend that's forming up until the objective points. So I will be looking to short from those objective levels. And I might even look to still buy it from these levels, even if we do come into that level, just because it could be a good hedge. Just because of the fact that Aussie and New Zealand dollar are bullish, we're looking to buy XXX Swiss franc. So naturally, if that were to follow correlation, Aussie Swiss franc would go long. So even if we do have a reaction short from these two levels, I wouldn't mind buying it from these two levels of demand to hedge the shorts, just in case we do end up going long and continuing with this sort of counter trend that we're seeing. So definitely looking for buys from these two levels of demand. We can see counter trend, lower low, lower high, lower low, lower high. We failed to generate any lower low before making the higher high and above that high too. So our last areas of demand are these two selling volumes. So looking for pullbacks, sweeping sell side liquidity coming into these two levels to go long, or we look to sell from these two levels of supply from the higher time frame standpoint. And then if price pulls back into here, I still may look to buy it to hedge it. So something like that. I know this is a long video. If you guys made it to the end, I appreciate your time. Thank you so much for taking the time out of your weekend to watch this video. Hopefully this helps you. Of course, if you have any questions, feel free to let me know. Hopefully you've marked up all these levels. If you haven't, please feel free to go back and watch it again. Obviously, the more times you watch it, the more times you understand it. Definitely repetition really creates habit. And if you really did appreciate and really like the way that we go over smart money concepts in regards to our strategy and want to learn more about how we do this on a day-to-day basis, feel free to head over to my website, arielfxtrading.com. Just book a free call with me. I'd love to talk to you about how we can help you along your trading journey and to see if it's the right fit for you. And of course, just like I said at the beginning, if it's not the right fit, well, at least and you won't have to, join our group. But if it is the right fit, then we'd love to work with you, put together a personalized plan for you going forward, and work with you one-on-one to really help you with this skill set that is so rewarding once you get it. But it just takes practice, it takes experience, and it takes mentorship and guidance and doing it the right way, and just discipline within the whole process. So guys, thank you so much. Enjoy the rest of your weekend, and we'll talk to you on next weekend's pre-market analysis video.